Welcome to the Pension Committee meeting this Thursday, 15th of July 21. First of all, a few housekeeping rules. There are 2 exits out of this building on that side and 2 behind me through if there is a fire alarm. There is not one expected at the moment. Just be aware that this meeting is being televised live for those that wish to tune in through the normal system. And the other thing is that microphones, when you are finished speaking, please turn them off. Otherwise, the screen will have a problem, or at least the operator will have a problem in the back. So hopefully we'll adhere to those things. So if we can move on then. First of all, sorry, I meant to mention, welcome to our new members, Councillor Angela Newton, MBE, Councillor Mark Allen, and Councillor Tom Smith. The rest, of course, we all know each other, and there are 2 apologies, I believe, Rachel, which are, Councillor Sarah Parkin and Councillor Martin Griggs. There are 2 members that haven't turned up yet, which we are expecting, but they may turn up in a short while, hopefully. If I can move members on to the minutes of the previous meeting. Obviously, there are only 4 of us that can vote on this who were at that meeting, and they are Councillor Coupland, Councillor Thompson, Steve Larter, and myself. What I'm asking you is to go through the 8 pages, so we'll take page 1, and this is for accuracy only. Page 1, 2, 3, 4, 5, 6, 7, and 8. Can I have a proposer that there are a true record of our meeting on that date on the 18th of March 21? Councillor Mike Thompson proposes, and could have a seconder. Steve Larter has seconded. All those in favour that were at the meeting, please show. That's passed. Thank you. Rachel, I will sign these minutes later on. Thank you. If we move on then to item 4, which is the Independence Advisor report, and I notice that the Independent Advisor isn't here either. I hope they're all not sitting in room 1. Is he?
Chairman, I am joining by video.
Right. Thank you, Peter, but I can't. Now I can see you. You weren't there originally. That's fine. I can see you now. Welcome to the meeting. If you would like to carry on then with your report, please.
Thank you, Chairman. I must apologise. I'm in Spain, and it was just too complicated to get back with quarantine and testing and so forth. My report was written about 3 weeks ago, and not a great deal has changed since. The markets are still pretty much becalmed, although there have been some modest gains in the United States markets in the last couple of days. The professional investors in particular are still convinced that there's a major economic upturn taking place. But equally, there's a lot of anxiety about the sharp rise in inflation around the world, which is most certainly still with us. Earlier this week, I think it was Tuesday, the latest US inflation number was published, and that was no less than 5.5% for June. To put that in context, the minutes of the last meeting, which you've just approved, Chairman, I made reference to the US Federal Reserve being anxious if inflation got above 3. Well, it's a long way above 3. So far, the US Federal Reserve, which for new members, by the way, is the US Central Bank, just like the Bank of England and the European Central Bank, so far the US Federal Reserve is holding its nerve, and is not raising interest rates as a policy response. There's no doubt that there are some exceptional figures behind this number. The most amazing one is that US second-hand car prices rose 10% year on year. And that's largely because there is a huge shortage of new vehicles because of the lack of computer chips, which many of you will be aware of. And there are other issues, in particular, the oil price has more or less doubled since a year ago, and there have been large increases in things like transport costs, electricity costs, and so forth. Excuse me, Chairman. The majority of market participants still think that rising inflation will be short-lived. But if that view were to change, and if bond prices, particularly government security prices, were to fall, i.e. yields to rise, then equity markets could well fall back. Chairman, it might help if I comment on the different attitudes of market players at present. Because of your background, you'll be familiar with what I'm going to say. But long-term investors, principally pension funds and to a degree insurance companies, are generally growing and they have positive cash flows to invest. And very largely at the moment, because of low bond yields, that money is going into global equity markets. Other investors, for example, hedge funds, and for example, private investors, do not generally have the luxury of positive cash flows. And they are just as likely, when they're searching for profitable investment opportunities, to want to short the market. So that's to say, to sell stock that they haven't got with a view to buying it back some days or weeks later at a profit. Just at the moment, short sales, as they're called, can generate huge losses if they go wrong. And there have been some spectacular examples in the last 3 months of such losses. So far this year, there's a sort of a standoff. The long-term funds are prepared to buy equities if they fall back, but they're not really very willing to chase the market higher. And equally, the short sellers are not very keen to go out on a limb and aggressively short sell because of the risks of losses. So that's where we still are, in something of a stalemate, which I imagine will get resolved one way or the other in the coming weeks and months. But that probably depends on the trend in the inflation figures, not only in the United States, but also elsewhere, Europe and the UK in particular. Chairman, I wanted to close with just a short comment on the UK market, which does look quite cheap compared to other global competitors. There's been a really huge volume of UK takeovers. That's to say, takeovers by overseas companies and often by overseas private equity funds from abroad. So the public markets in the UK are being stripped, so to speak, of their most promising companies. This is leading to adverse comment in the media and progressively in Parliament. The UK market has been drifting upwards in response to this takeover activity. And I think it probably will continue to do so, if only modestly. Chairman, I'll leave it there. Thank you very much.
Thank you, Peter. Has anyone got a question for Peter on his independent advisor's report? No? Yes, Tom?
Thank you, Chairman. Is there a risk with what Peter's just said about the takeover of assets and companies? Is there a risk to the pension fund that we administer with these continual takeovers and sort of taking out the good quality companies from the UK market? Will that adversely affect what we do and in being able to operate in the UK space and then more and to diversify our assets to ensure we're not overly reliant on global companies and other assets, sort of gilt yields and
Thank you for the question, which is very well structured. The short answer is that the Lincolnshire Fund will benefit when stocks that it holds are taken over at elevated prices. But in the long term, it reduces the attractiveness of the UK market because it lacks high growth companies and in particular tech companies. And also there is the issue around UK companies being managed from abroad and not necessarily in the interests of the UK economy. But that's a subject for politicians. It's not a question for investment managers and advisors such as myself. I don't know whether Joe has anything to add to this topic.
No, thank you, Peter. Tom, does that answer your question? Yeah, thank you. Anyone else wish to ask a question? No? Peter, thank you very much for your report. Excellent as usual, keeping us updated on the world goings on. Thank you. Right, moving on then to item 5, report by the independent chair of the Lincolnshire. Sorry, can we have approval that that report from Peter is noted, please? All those in favour, please show. Thank you. Just when I was getting used to Teams and Zoom, it's finding it rather strange now trying to do it this way, but that report is noted, so many thanks to Peter for that. Moving on, as I said, to item 5, report by the independent chair of the Lincolnshire Local Pension Board. Moving over to, sorry Steve, do you want to ask something?
Sorry, Chairman, we missed item 2, declarations of interest, so I just wanted to make sure that my usual interests are noted. Thank you, Chairman. If I can log my usual ones as being a deferred and active member of the fund.
Thank you, Chairman. Apologies for my lateness, mix up with face masks. Could I declare as a contributing member of the fund and an employee of LCC? Thank you.
Councillor Newton, she sits on the PSPS board, which do contribute to this pension fund. So she was chair this year and vice chair this year, so probably that needs recording.
Right, apologies for that. Moving on then, we'll finally get to the independent chair of the Lincolnshire Local Pension Board. I'd like to hand over to Roger Blatchby. Welcome, Roger, and David as well.
Thank you, Chairman. Chairman, I thought it might just be useful to spend just 1 minute for the benefit of the new members on, if you like, the role of the Pensions Board. Because it's fairly new. It was established in 2015. Its primary aim is to assist the administrative authority, and that means the head of pensions, in the governance of the scheme to make sure it's effective and efficient. In Lincolnshire, perhaps compared with others, we're fairly small. We've got 5 members, 2 member and 2 employer representatives, and I'm the independent chair. I think it's fair to say that we work closely with the Pensions Committee in collaboration and not fighting each other, which I think is pretty important. There's more information if you wish to read it in the annual report from the Pensions Board, which is amongst the papers today. So in terms of what we were doing for the last quarter, you'll see in 1.1 that there were 5 main items, which I'll just touch on if I may, Chairman. So the employer monthly submissions and contributions monitoring. Just very briefly, I mean, during the financial year, there were 20 cases of late payment of contributions and 111 cases of the late submission of the monthly returns. Now, there are about over 270 employers who are returning contributions, or should be making contributions, every month. So, in that respect, they're fairly small, but Joe, as the head of pensions, knows that I am a stickler for this, and I guess, you know, when we get 100%, I'll be satisfied. We'll continue trying to remind employers, and it's particularly the payroll providers, of their duties, because at the end of the day, you know, they're employer contributions, but they should be paid on time. So I don't think, given the COVID conditions, I don't think it was a bad year. The next one, Chairman, is the Pension Regulators Public Service Survey. I guess I had quite a significant role in completing that with the help of Joe and also West Yorkshire Pension Fund. The issues that the survey covered a range of topics which are mentioned in the report. The pensions regulators just issued the actual report from all that, which is about 80 pages long. I only ran off the executive summary. And no doubt the Pensions Board will be considering that. But I think we'll come out of it pretty well. That's my personal view. 1.4, pension benefits in suspense. The committee have been informed previously that when a member reaches pensions age and that they've not been traced, then to avoid tax issues, West Yorkshire Pension Fund set up an HSBC account outside the fund effectively. And then there are various sub-accounts for each member. And as I say, it's very much to avoid unauthorised payments. Now, we monitor that on a 6-monthly basis, and at the last meeting there were 60 people who'd retired and entitled to their pension, worth about £47,000. We asked for further information on that, because at the end of the day, it is members' money, and we'll be considering the response to that later this afternoon. The fourth one is the checklist dashboard. Joe will be commenting on that anyway, but again, particularly for new members, you'll see that we've got 95 green, 1 not relevant and 3 partial, which I think demonstrates that the Lincolnshire Pension Fund is administered very, very well. So I don't think we've got any worries on that front. And then in terms of the Pension Board membership, there were two people whose terms of office were up for re-election, and I'm pleased to say that both Councillor Whittington and Dave Vickers, and Dave is just behind me, were re-elected to the Pension Board. So in terms of the conclusion, well, the vast majority of employers pay their contributions on time. We do have some concerns about the delays in finding the rightful owners of pension benefits, and thirdly, Lincolnshire is largely compliant with the TPR checklist dashboard. If there are any questions, Chairman, I will try and answer them.
Thank you, Roger. Any questions for the Pension Board? None forthcoming, Roger. Many thanks indeed for your report. As you can see in the recommendations, the recommendation is to note the report. Can I have a show of hands that it's noted? Thank you. That is passed. Thank you again, Roger. And moving on then to item 6, which is the Pension Fund Update Report. Over to you, Joe.
Thank you, Chairman. This is the standard quarterly paper, and as this is the first time that new members have seen this, I will go briefly through each section. So section 1 on page 21 sets out the funding level change and performance over the period. More information on the underlying manager's performance is included in the investment performance report at item 14. Paragraph 1.3 sets out the asset allocation with property and cash under and over their tolerance levels, as explained at paragraph 1.2. It has been a good quarter and a solid year for performance, outperforming by 0.2% on the quarter and 1.3% over the year. But the funding level has fallen slightly over the quarter from 97.5% to 96.4%, as shown at paragraph 1.9. Section 2 on page 25 and the appendix on page 33 show how the fund meets the requirements of the pensions regulator, as Roger has just mentioned in his paper. One area at B12, which is about whether members have completed TPR's training toolkit, has moved from green to amber, but this shouldn't be seen as a cause for concern, as the new members have a 6-month window in which to complete this training, as set out in the annual training policy that's brought to this meeting at item 11. It's therefore expected that this will return to green for the December meeting, as it's expected that the new committee members will have completed their training within that 6-month period. Section 3 on page 26 updates the committee on any breaches that have occurred over the quarter. The late payment of contributions is covered in the report at item 9 on the agenda. The other breach that we're reporting this quarter refers to the problems with late payment of benefits as a result of issues with Prudential, the fund's AVC provider. This will be covered in more detail in the Pensions Administration paper at item 8, but in summary, there were issues with backlogs in allocating contributions and paying over settlements in a timely manner. They have an improvement plan in place, however, this was expected to be back to normal by the end of April and then extended to the end of June. We have reported them to the pensions regulator, and we're awaiting an update from Prudential's management as to their expected date to resume normal service, as the end of June is obviously now passed and there are still backlog issues. Prudential have stated that any contributions allocated will be backdated so that no member will be adversely impacted by their issues. The chairs of the Pensions Committee and the Board, and also the Section 151 Andrew Crookham, were notified of that breach on the day it was raised with TPR on the 25th of May. Section 4 on page 26 would normally cover a quarterly update of any changes to the funds risk register. However, as this meeting has the annual review of it at item 10, there's no quarterly update on this particular paper. Section 5 on page 26 provides an update on what's happening with Border to Coast, our asset pool. There weren't any new investments made over the quarter, but work has continued on the development of the sub-funds, with the next transition to the multi-asset credit fund expected later this year. The joint committee meeting was held this week on the 13th of July, and I circulated papers with the committee on the 5th of July. If anyone does have any questions or comments on the work of the joint committee or anything they see in there from Border to Coast, then they can raise that, please, with Councillor Strengle, so it can be raised at the next joint committee meeting, which is being held on the 30th of September. The AGM for Border to Coast is being held on the 20th of July, in addition to a responsible investment workshop for the joint committee members to ensure that the partner fund views can feed into the annual review of the RI policies of Border to Coast. Section 6 on page 28 updates the committee on the working group that's been set up for the investment consultancy service tender. The first meeting has now been set for Thursday the 29th of July, and a recommendation from that group excuse me, will be brought to the October meeting of this committee. Section 7 on page 29 proposes some changes to the upcoming meeting dates. We're proposing swapping the December and January meetings so that the December meeting becomes the normal quarterly meeting and the January meeting becomes a manager presentation meeting. And for the following year, also swapping the September and October meetings, so September becomes the normal quarterly meeting and October becomes the training meeting. This will align the committee meetings just closer to the quarter end. We can't do it much earlier than that due to the time it takes to get the information from the managers, but we feel that would just be reporting slightly more efficiently for you. In addition, for this year, it's requested to move the December date from the morning of the 9th of December to the afternoon of the 16th of December due to a clash with the Local Authority Pension Fund Forum annual conference that normally the chairman and an officer attend. And going forwards, to look at the third week in December as standard for that quarterly meeting to avoid any future clashes. The final comment I'd like to make is on the training and conferences at section 9. Officers haven't attended anything in person since the last meeting. However, there have been many virtual webinars and discussion meetings held, and these have covered some of the hot topics of COVID, McLeod, pension regulators' proposed new code, amongst many other things. Information on any upcoming training is included in the monthly update letter that you receive, and in the last letter there were opportunities to attend the LGA fundamentals training, either virtually or physically, Border to Coast new member training, which is being held virtually, and the Border to Coast annual conference, which is being held physically in Leeds. So please do get in touch with my team if you would like to attend any of those events. The committee are asked to share their comments on any training events they've attended since the last meeting. Otherwise, I'm happy to take any questions on the report. Thank you.
Thank you, Joe. Any questions from members? None forthcoming. Right, thank you, Joe. If we move to the recommendation, you'll note that there are two recommendations, and in fact, the second one, I'm going to split it into two as well. So, first of all, can I have approval that the report has been noted? That's approved. And then if we look at 7.2a, I want approval, if possible, that we are moving that meeting. So can I have a show of hands, please? Thank you, that's approved. And 7.2b, to change the September, October meetings as written. All those in favour? Thank you. That's approved. Thank you, Joe. We're moving on then to item 7, which is the responsible investment update. And that's over to Claire. Thank you.
Thank you very much, Chairman, and good morning, everybody. The report today brings committee details of the fund's responsible investment activities during the last quarter of 2021. The report details activity which has been undertaken by the fund and organisations that the fund is a member of. This includes the work of LAPFF, the Local Authority Pension Fund Forum, Border to Coast, the fund's chosen pool, and Robeco, who were appointed by Border to Coast to provide voting and engagement activity. The first section of the report sets out details of the work of the Local Authority Pension Fund Forum, LAPF. They're a voluntary organisation with membership of 82 public sector local authority pension schemes, including Lincolnshire, and 7 asset pools, including Border to Coast. On behalf of its members, it acts to promote the long-term investment interests of local authority pension funds. Paragraph 1.3 of the report details the work they've undertaken during the quarter, and this includes company engagement, investment manager engagement, supporting sector-wide initiatives, and attending meetings on behalf of its members. The next section of the report covers the work of Border to Coast. Border to Coast, as the fund's chosen pool, are a strong advocate of RI activity. During the quarter, they published their normal activity report on their website of the activities they've undertaken, and a link to this is included in the paper report, and their work has included supporting the selection of appropriate RI investments, supporting industry-wide initiatives, and overseeing voting on partner holdings for the Border to Coast funds. It's a relatively short bulletin, but provides some really interesting information on the activity that they undertake. In addition to the work they undertake directly, Border to Coast has also appointed Robeco to provide voting and engagement activity. During the quarter of 2021, they've attended shareholder meetings and voted at company AGMs for Border to Coast holdings. In addition to this, Robeco have launched a new engagement theme on climate transition for financial companies. And again, more details on this and their voting activity is included in their quarterly report, of which there's a link in the paper. The next section of the report looks at voting activity for shares held by the fund, and this relates to 2 sets of holdings, both with Border to Coast, one for the UK equities and the other for the global equity holdings. Appendices A and B provide more details on this, and this includes the number of votes cast, meetings attended, and where votes have been cast with or against management, a rationale for explaining why that has been the case. The fourth section of the report provides details of the Border to Coast RI survey, which was conducted earlier this year. The survey was sent to committee members, board members and officers. The results are set out in the report in summary and at Appendix C in detail, but it should be noted that the responses to the survey for Lincolnshire members were made by previous committee members. The survey sought views to look at current levels of RI understanding, existing communications and what people want to hear more about, how RI is currently managed and integrated, and how it works across the pool and should be prioritised in the future. The next section of the report looks at net zero proposals. Net zero is achieving an overall balance between greenhouse gas emissions produced and emissions taken from the atmosphere. Countries, companies and investors are coming under increasing pressure to make a commitment to net zero by the year 2050. Border to Coast are keen to work with partner funds to explore how this can be achieved by the pool and how they can support funds to make their own commitments. With this in mind, it is proposed that this topic will be picked up at the September committee training session. The final section of the report highlights the Scheme Advisory Board Responsible Investment A to Z. This is a glossary of RI terms and explains organisation responsibilities, standards and legislation. And again, there is a link to this in the report. And I'm very happy to take any questions.
Thank you, Claire. Yes, Councillor Mark Allen. Mark.
I pressed the button the wrong way. Do we have a view of what the voting might be that Border and Coast do on our behalf before the vote has actually taken place, or have we given them carte blanche to vote on our part? And I have a follow-up question as well.
Do you want me to answer that first? And then, yeah, that's fine. The committee receives in the January meeting the voting policy for Border to Coast, so that is agreed in advance. LAPFF, the Pension Fund Forum, provides some guidance which goes to the pool and to the fund where they're making specific voting recommendations. Where Border to Coast are proposing something which may potentially be viewed as controversial, they will contact funds in advance of that voting, but really Border to Coast and Robeco are the expert in this area, and we very much rely on them in terms of their recommendations.
Well, I think it was the point that you made that if there's anything controversial, we do get a view of it before that controversial vote is made. And the second question is sort of related. I believe that some of our fund is managed solely at Lincolnshire. Is it not? And no? In which case there isn't any voting that we deal with on a county basis at all.
No, all of our assets now are out with external managers, and the voting on those is with those managers.
Okay, thank you.
Any other questions for Claire? Yes, Tom?
Thank you, Chairman. With regards to the net zero, is there a risk that smaller investment opportunities for the fund and generally could be harder to come by because of this commitment, whilst I appreciate that it's needed for obvious reasons? Is this very much like when they say, oh, if your car's a certain age, you have to pay more tax, what have you? Is there not a risk that actually we're stifling competition and undermining the smaller areas or smaller companies we could invest in through this?
Yeah, if I can take that, please. The way it works with the net zero is that it's looked at across the entire fund, so it's not expecting every single investment we have to be net zero, but across the whole fund. So that there will be some that will be contributing over and above in reducing their carbon emissions that will then be able to offset those that are not so able to. So it shouldn't stifle any of the investment opportunities that we're able to make.
Thanks for that, Joe. Tom, happy with that? Yes. Thank you. Yes, right. It is important. I think it's a great comment that you brought up there, actually, Tom, because obviously the higher returns tend to be, unfortunately, with some of these mining companies, etc. But we're not looking for, you know, that type of return anyway. We're just wanting to make sure that we balance the books as far as paying people out. Yes, Councillor Mark Allen.
Many of the mining companies are mining the chemicals that we need for the very green batteries that are used in the green electric cars, Chairman.
Absolutely. It's all been looked at in the round. I can certainly assure the committee that as a member of the joint committee board, if you like, one of the 11 chairmen, when we meet, we have a very intense meeting next week, which will be dealing with responsible investment. But I think that Border to Coast are on track to make sure that, you know, what we're doing is responsible in the way we invest. I don't see any real issues with that. We've taken it very seriously since I came onto it in 2017. And it's one of the issues that comes up time and time again in every Border to Coast meeting. And as I said, on the 20th, we have another meeting where we'll be discussing this in depth. And that's through a virtual means, unfortunately. But yes, Joe?
Yeah, and if I can just add, Claire mentioned about the pressure that there is on the responsible investment. There's expected to be some guidance come out from Scheme Advisory Board and MHCLG, where we will have to report in more detail what we're doing. It's already coming in with the private sector, and it will be coming in with us. So it's an area that, as Claire mentioned, we'll be looking to bring some training to, which I'll mention in the training paper. But it's something that we're going to have to make sure that we have policies and are able to evidence what we're doing going forwards over the coming years. Thank you.
Thank you, Joe. And just to add to that, obviously, members, if you feel that there's something burning that you want me to bring up with the Border to Coast Pension Partnership Board, then please email me or phone me up, whichever, and I will certainly bring it up on your behalf. It is important that we keep the Border to Coast partnership in line with what we want as a pension committee for Lincolnshire. Thank you. If we move to the recommendations then, committee to note the report and discuss the responsible investment activity undertaken during the quarter. I think we've given that a fair hearing, but if anyone else wants to comment before I ask for approval on that? Nobody? So can the committee note the report, please? Thank you. That's approved. Thank you for that. And we'll move on then to the pensions administration report. It's usually Eunice. I don't know, is he on screen?
Am I on screen now?
Yeah, I can hear you. Over to you on your report.
Yeah, thank you, Chairman. Good morning, everybody, particularly the new members of the committee. I will make my report brief. Hopefully everybody's read it, and I'll leave some time for questions at the end. So just going through the report, the first part is reporting on our performance. So this covers the last quarter up to 31st of March and shows key work areas, number of cases we processed, what our target dates are, and how we've achieved those targets. And all these are measured through our automated workflow processes. So every piece of work that comes in automatically starts a work process, and then that triggers the workflow reporting that we do at the end of when the cases are completed. So you'll see for the quarter quite a number of key areas that we measure and report on, and pleasing to report really that in this quarter we've met all but one KPIs really. So that really is pleasing, because usually there are some areas where we do underperform a little bit for various reasons. The only one I can see on this one is the deferred benefit, the estimate for deferred benefits into payment, which is only one case really that went outside the 10-day KPI period. And that was because this member had some complications on their case, particularly to do with their AVCs and getting up-to-date information on their fund values. So nothing more than that really on that particular area. Section 2 just gives information on the composition of the Lincolnshire Pension Fund in terms of the membership details and the different categories of membership. And that's broken down further as well into age groups as well. During the quarter as well, employer activity, we had 4 new academies and education trusts joining the pension fund, 1 new admission body, so all in all 5 new employers, bringing the total number of employers in the Lincolnshire Fund to 293. We do, as most of you know, every quarter we do a survey of our members, and again that's to gather details of their experience in terms of the service they've had from us, and it is a random survey, so we sent out 119 sample surveys to members that received a service from us, and 20 were returned, and the purpose of the survey really is to measure their experience and then see if there's any areas where we can improve our service. Appendix 1 gives you more information in terms of the responses we got back from our members. Most positive, there were 2 really complaints or suggestions. One regarding a tax. Member wasn't particularly happy that they had to pay tax on their pension because it was a small pension, but as we all know, pensions are subject to pay as you earn, and therefore depending on what tax code we have supplied from HMRC, then we have to deduct tax from the pension. And the other complaint was regarding a transfer out to the teachers' pension scheme, and again transfers can be quite complex and they are time consuming as well, so they usually don't happen very quickly, unfortunately, but we are reviewing our processes and again seeing if there's any areas where we can find efficiency savings and reduce the time that it takes to process transfers. Employer training, as you can imagine, all our employer training at the moment is virtual. We use webcasts now, so we've held 6 employer webcasts, and those are available for members to view after the event as well. So they're all on our website. Section 4 gives you some details on the internal disputes procedure. Again, those new to the committee, the pension fund is required to have a 2-stage appeals process where members can, if they're not happy with any decisions made or decisions not made, then they can go through the appeals process before they can take their case to the pensions ombudsman if it's still not resolved at that stage. So details there of stage 1 appeals, nothing against the fund. 2 cases where appeal against scheme employers. The prudential one I'll cover a little bit in a minute or two. And then the other appeal was against being refused an ill health pension, and that's still being looked at because the employer is looking at a second medical review. So section 5, administration update. So I'll start with prudential. Again, you'll see from the papers that Prudential, the AVC provider for Lincolnshire and for West Yorkshire as well, are struggling at the moment. Up to now, they probably have been the best AVC provider across the sector, and have been really engaging and probably do above and beyond what they're expected to do as an AVC provider. However, since late last year, there have been a number of issues with their administration, which has impacted on members, which has resulted in delays in processing contributions, allocating contributions to members' records, and when members retire as well, processing their settlement payments as well. So these issues have caused big concern for us and for members, obviously, because where members have retired, it certainly delayed their payment of their pension. And members, because they can see their contributions on their AVC accounts through their AVC portal, have noticed as well that when their contributions have been deducted from their salaries, they've not appeared on their AVC record. What the Prudential have said is members will not lose out, and once contributions are allocated, they will get the investment return they would have done if they'd been allocated at the correct time. Sorry, I should say really that these issues with Prudential have resulted because they've changed their administration platform. They used to be on the Capita platform, and I think they've moved to something called Diligenta. So they're having all kinds of problems, and not just in terms of processing contributions and processing retirements, but also in terms of dealing with telephone calls, etc. So you'll see attached the actual letter, the latest letter from Prudential. And whilst they initially told us everything would be resolved by April, it hasn't. We've still got ongoing problems. We are still engaging with them. I personally have engaged with senior management at Prudential to try and get assurances from them, which have been coming, but is not kind of confirmed with their actions. And as you'll see from the from the letter there, complaints are still ongoing. I've had a recent correspondence from one of our members who said he's just received a £200 compensation from Prudential because of the issues he's been having with his AVCs. But it is still ongoing, and the latest position from Prudential is that the annual benefit statement they sent to members will be delayed as well as the annual scheme information that funds get as well. And it's kind of worrying a little bit to say, they say at least 8 weeks later than usual, so expect it to be more, I suspect. We have reported Prudential to the pensions regulator, as has Joe. A number of other authorities have written, rather than report to the pensions regulator, they've just written to the pensions regulator with their concerns. Pro themselves have reported themselves to the pensions regulator as well. So to date, we've not had anything back from the TPR in terms of potentially what their investigations or what their potential action might be, if anything. I'm not sure what action the TPR can actually take, to be honest, but we await both improvements from Prudential and to hear from the TPR regarding further action. I'll skip the rest of the pensions admin update, other than just maybe pick out a couple of items. 5.3 about annual benefit statements and deferred benefit statements. This year, for the first time, we are issuing them electronically. We are writing to members, asking them to sign up to the Secure My Pension portal, where they can access their statements. However, where members still prefer paper versions, that will still be available to members. One audit was undertaken by the Council's internal audit. That was on transfers in, and the the opinion of audit was that the controls identified and the controls in place, the risks identified and the controls in place are excellent. There were no recommendations made for improvement, so that was quite pleasing as well. On the technical update, again, nothing much to report really, than maybe just pick out the fact that the exit payment, the first item on exit payment data, existing committee members will know that late last year we had overriding legislation, but not pension scheme legislation, which required exit payments to be capped. That was quickly withdrawn because the legislation itself had some unintended consequences, as MHCLG put it. But that cap on exit payments has not gone away, and MHCLG are looking at their policy to end excessive high exit payments in the public sector. So they are gathering information which will ultimately result in some further provisions and capping of exit payments. The other item really is the TPR's single code of conduct. The TPR is going through a consultation at the moment in terms of consolidating their existing code of practice into shorter topic-based modules. So they're replacing 10 of their existing codes of practice, which are mainly to do with governance and administration of pension schemes, and it'll be more a web-based product now, which hopefully should be much easier to use for people like us, really, in terms of who administer the pension scheme. Web registrations. So as I said earlier, we are actively looking at encouraging more web registration. So those are the current percentages and numbers at the moment. We are expecting them to go up by the 31st of August, which is the deadline for issuing the annual benefit statements. And what we're doing effectively, as our annual benefit statements are ready and on the portal, we're writing to members at that stage. So we're looking at writing over to members over a phased period, right up to middle of August, to say, can you sign up please to access your statements? Section 8 is on budgets in terms of what our shared service budget was last year and what our expected cost is going forward. So for 2021, the final cost per member was £13.69. So that is a reduction of £2.91 per member against the projected charge, which was £16.60 per member. So what that effectively means is that all our shared service partners will receive a refund in this year's recharges, and the table shows over the last 5 years effectively what the savings has been for Lincolnshire in terms of the contract price. We bid on this contract on the basis of it will be a charge of £17 per member, but as you can see over the last 5 years, our actual cost per member for 16-17 was £13.70, £14.35 for the following year, and henceforth. So based on those actual charges against the contract price, then the savings over those 5 years amount to date to just under £1 million for Lincolnshire. And our charges, our budgeted charges for this year is £14.87 per member. And finally, to say that we have been shortlisted by Pensions Age for those categories. The actual awards ceremony is tonight, actually. So we'll see whether we win anything or not. So sorry, I've taken longer than I expected, Chairman, so apologies for that, but happy to take any questions.
Thank you, Eunice. Very comprehensive as always. Good luck with the awards this evening. Hope you'll report on your winnings at the next meeting. So we're looking at the recommendations, which is, first of all, questions. Mark.
I have a feeling I may have mentioned this some time ago. If the performance indicators have been easily met, to a certain extent, the purpose of having a list of performance indicators is to point us towards the ones that are of concern, I think, as opposed to the ones that are less concerning. And if the targets are set in such a way that all the performance indicators are being met relatively easily, does it suggest that the targets may be a bit too lenient?
I will respond to that, and you may be right in that, yeah, there may be lenient, and this is something we've discussed at our shared services management meeting as well, and Joe certainly raised that as well. The decision we made was that we will set up a little working group to look at the performance indicators and see where we can look at improving some of those. So yeah, it's on our action plan.
Thank you. A very good response.
Thank you, Chairman. On the shared services budget, have some of the savings arised from revised working arrangements over the last 16 months? And if so, do you foresee some of those changes continuing in the future?
I would say really no savings have arisen because we've invested quite heavily on IT equipment. Most of our staff did not have remote working equipment, so we've certainly invested in lots of laptops, lots of screens, lots of other kind of mobile phones, and then kind of adapters, etc., for people to access Wi-Fi, etc. So certainly a big investment's been made in IT. Where we've saved is obviously more based on accommodation, really, in terms of running cost, electricity, etc. So that's not really much of a recharge to the shared service budget. We're looking probably later in the year at maybe getting some staff back in the office or staff back in the office on a hybrid working model. Where we're looking to have the bigger savings is through the use of the My Pension portal and issuing communication. At the moment, we're starting off with the annual benefit statements, but down the line, we're looking at using that for more day-to-day kind of communication with members as well. So the bigger savings, the bigger cost is really printing and stationery. So we do expect to see savings in future years against that particular budget code.
Thank you, Eunice. Any other questions for Eunice? Can't see. Yes, Peter?
Yeah, thank you, Mr. Chairman. Yeah, I think I always find this report very interesting every single time because this is what we're about. We need administrators that do a jolly good job. The performance and the cost per member is mighty important because they're linked. And during a year, in the difficult year we've had, we've got a £3 rebate coming back on the members, which I find really rewarding because we've not had a lot of input into the pensions over the years and getting together like this and really getting to the nitty-gritty. There's no outstanding appeals, no cases with the Ombudsman, so they're doing a good job, and I just hope that that continues for us because that is one less worry a pension committee has not got. So, yep. That doesn't mean that Eunice can have a £1,000 rise, but he's doing a good job, and I think we're obviously with the right people. We're being with West Yorkshire.
Thank you for that, Peter. Yes, I'd concur with your comments there, and I'm sure the whole of the board would concur as well. So, Eunice, there doesn't appear to be anyone else, so thank you for your report. And members are asked in the recommendations to note the report. Can I have a show of hands, please? That is noted. Thank you very much. Thank you, Eunice.
Thank you, everybody. Thank you, Chairman.
Moving on to agenda item 9, which is the employer monthly submissions update. Over to Claire.
Thank you, Chairman. This is the standard quarterly update on late and incorrect employer submissions. The report today covers the final quarter of 2020-21. To provide the committee with some background to the area, contributions from employers should be received by the 19th of the month following their payroll. An employer is classed as late if either their cash or the supporting data is received after this date. The fund monitors closely employer compliance with their statutory responsibilities to pay over their contributions and has a dedicated resource monitoring employer performance. That person works closely with employers and with West Yorkshire to ensure they meet the requirements that are placed on them. Details of the number of late payments and data submissions are set out in Table 1 on page 108, and these are analysed between late payment of cash contributions, late submission of the supporting data, both late payment of cash and submission of data, and where the cash and data are submitted on time but they don't agree, or where the employer contribution doesn't match the rate which they should be paying. As you can see, there is generally very few employers who pay contributions late. The area of poorer performance is the submission of the data return, although, as you can see, quarter 4 saw generally good compliance in this area too. The issues which we had seen early in the financial year for one of the fund's larger payroll providers were resolved, and this is borne out in the submission of data returns. Employers who miss the fund's deadline in 3 out of a 6-month period will be fined unless they can offer extenuating circumstances. And if you move to the top of page 109, Table 2 sets out the number of fines issued during the quarter. And as you can see, there were no fines issued. I'm very happy to take any questions on the report.
Thank you, Claire. Any questions for Claire? None forthcoming. Thank you for your report, Claire.
Can I propose there are no actions that we wish to take against the late? Can I suggest that that I propose that the recommendation is that we note the report and there are no actions we want to take against any late suppliers of information. That's what the recommendation says, Chairman. Well, can we note the report and not and also say that we do not wish to take any action against? I've got a severe ear infection. Right. I suggest, Chairman, that we note the report and say that there are no actions we want to take against employers submitting late information.
Thank you, Tom. Given what Marcus just said, are we happy then to note and the fact that there are no actions to be taken? All those in favour? Thank you. That's passed. Yep. Apologies. I'm not sure whether I need to switch this thing off. I don't. Right, okay, because I was told differently, but never mind. I'll leave it on then. Thank you very much indeed. Moving on to item 10, which is the Lincolnshire Pension Fund Risk Register.
Thank you, Chairman.
Thank you, Joe.
This is the annual review of the risk register and risk policy management. This policy, attached to Appendix A on page 117, is a formal record of the fund's appetite for risk, its risk management structures, and its approach to risk management. There haven't been any changes to the policy last year to bring to your attention. The risk register, attached to Appendix B on page 121, has been updated to reflect the new risk register template of the Council, but I don't intend to go through those risks at this point. The risks are split across 4 areas: governance, where there are 4 risks; investments and funding, where there are 10 risks; operational, where there are 15; and people, where there is 1 risk. As you can see, there are no red risks, and the assurance status across the risks is generally substantial or high. The risk appetite is a new addition, and the definitions are set out in paragraph 5. This has been left blank at this point, as work is still underway on identifying the risk appetite of CLT and the directorates, and then that can be fed down and we can seek the risk appetite of the committee. The report's recommendations are to review and approve the risk policy and the risk register. I'm happy to take any questions on any of the risks or the policy. Thank you.
Thank you, Claire. Any questions from committee? None forthcoming, so thank you. Recommendation is to review and approve the risk management policy and review and approve the risk register. Can I have a show of hands, please? Thank you, that's approved. Thank you again, Claire. Moving on, item 11, which is the Annual Pensions Committee Training Plan and Policy. That'll be you, Joe.
Thank you, Chairman. So this is the annual review of the committee's training plan and policy attached to Appendix A on page 133. The training policy sets out the training and development of both members of the committee and officers of the council responsible for the management of the pension fund. As set out on page 135, members have to complete a mandatory minimum level of training to sit on the committee and undertake regular training throughout their time on the committee. There are 3 areas of the mandatory minimum training, just to bring to your attention. First is to undertake a training session with the head of pensions, which I'm happy to say that all new members have now completed. Secondly, to attend a basic training course such as the LGA fundamentals. Information on this year's training was sent out in the last monthly letter, and members can contact my team if they would like to attend. And thirdly, to complete the online training of the pensions regulator within 6 months of joining the committee. Could I ask, please, that once members have completed this, they send me their certificate so that it can be added to their training record. There have been no changes to the training policy since last year, and the annual training plan on page 137 has been updated to reflect the expected meetings and training events for the coming year. The plan shows the link to the SIP for Knowledge and Skills framework, which is attached to Appendix B on page 141, setting out the 6 areas that the committee is expected to have collective knowledge of. It's suggested that the training session to be held on the 16th of September covers the investment strategy of the fund, presented by the investment consultant, and a session on becoming net zero by 2050, following the discussions earlier on the RI paper, presented by Border to Coast. The date for the February 2022 meeting hasn't yet been agreed. However, it's proposed that we invite the actuary to present training on the valuation process as we lead up to the March 2022 valuation. The report's recommendations are to approve the training policy, to agree the proposed topics for the training meetings in September and February, and to approve the training plan. So I'll be happy to take any questions. Thank you.
Thank you, Joe. Any questions? Can't see any. Right, the recommendations are to approve the training policy. Secondly, to agree the proposed areas for training for the September and February meetings. And 3, approve the annual training plan. All those in favour, please show. Thank you. That's carried. Thank you, Joe. Moving on, item 12, the Pension Fund Draft Annual Report and Accounts. That's over to you, Claire.
Thank you. The report today brings the draft annual report and accounts to the committee for approval. The annual report and accounts have been prepared in accordance with statutory and industry guidance, and this is mainly set out in the Code of Practice on Local Authority Accounting. The annual report is attached to the report at Appendix A. This is a large document, but it provides lots of useful and interesting information on the fund, including governance and management arrangements, investment details, employers, administration and member information, the fund's annual accounts, and copies of fund policies and statements. Paragraphs 3 and 4 of the report bring to the committee's attention a timing issue relating to the asset valuation information included within the pension fund accounts for unquoted holdings. The draft accounts have been published in advance of the fund receiving all final 31st of March valuation for these holdings, and these include things like private equity, infrastructure, and unquoted holdings within our alternatives mandate. The accounts presented today include all of the valuation information that had been received up to the 30th of June. Further valuation information which is received beyond this date will be reviewed and incorporated into the accounts if it's considered material, either individually or collectively. This may mean that the final version of the accounts will be different to those presented today, and any changes will be reported back to the committee in October. The annual report and accounts are currently with our external auditor, and we will bring their report of their findings to the committee in October. And I'm very happy to take any questions on the report or the annual report.
Thank you, Claire. Any questions for Claire? Yes, Steve?
Thank you, Chairman. It's probably too early to say, but last year, obviously not the pension accounts, but the main LCC accounts had, shall we say, a bit of a challenging audit. Are you expecting a smoother audit this year, or do you foresee problems coming again?
In terms of the pension fund, the work on our audit commenced in the middle of June. They're well on with that work, and having met with them yesterday, have assured us that all the work on the revenue fund side of things is completed, and by the end of July all the asset work which isn't related to unquoted holdings will be completed. They've set aside 2 weeks in September to complete the work on the unquoted holdings, and they don't anticipate any problems from the pension fund side meeting the statutory deadline at the end of September. And I'll pass over to Michelle to pick up the county side.
Thank you. For members of the committee who haven't met me before, I'm Michelle Grady. I'm the Assistant Director for Finance. In terms of the LCC accounts, it was one particular issue we had last year, and it was about the valuation of our energy from waste plants. So we did quite a lot of work last year, engaged with an independent valuer, and as far as I'm aware, Mazars were completely content with the work we did around that, and we know how to deal with that going forward. We've produced the draft accounts on time for Mazars to start their work, and they've given no indication at the moment there are any issues for us to be aware of. We do have a new audit team working with Lincolnshire this year, so obviously that creates a challenge in itself, but nothing to report at this moment that would suggest that we should have any problems with the audit as it stands.
All right with that, Steve. Thank you. Thank you, Michelle, and thank you, Claire. If we move then to the recommendations. Sorry, Peter?
Yes. Sorry, just to quickly, Mr. Chairman. Over a year ago, I never thought that we would punch above our benchmark because this pandemic has been global and our investments are global. But to return the fund of gaining sort of £1 million a week is really great. I would never have thought that we would have done that with the pandemic that we've had. But you know, the figures are there, and the figures prove that wherever we've invested and the people we've invested our cash with have still stuck to their guns and got the job done for us. So I think that's another big plus during a difficult 12 months.
Thank you, Peter, for that. So let's go back to the recommendation. Then the committee are asked to approve the draft pension fund annual report and accounts. All those in favour, please show. That's carried. Thank you very much. And thank you again, Claire. Moving on, item 13, the annual report on the fund's property and infrastructure investments. Back to you, Claire.
Thank you. This report sets out the performance on the property and infrastructure elements of the portfolio during the year up to 31st of March 2021. The fund's strategic allocation is 10.5% to property and 2.5% to infrastructure. The table at the top of page 358 sets out how this is allocated, and the committee can see that the majority, some 70%, is allocated to balanced UK commercial property funds, with smaller elements to property venture, a European property growth fund and infrastructure. Paragraph 1.5 sets out each element of the portfolio's performance against its benchmark, and the UK commercial property funds have outperformed their benchmark. However, other property and infrastructure underperformed theirs. Information on individual property and infrastructure holdings and their performance are set out in later sections of the report. Details on the UK commercial property funds are set out at section 2, and the fund is invested in 4 separate portfolios, and these have been selected to provide diversified exposure to the sector. And details are set out in table 3 of how Lincolnshire's holdings compare to a benchmark. Further paragraphs 2.6 to 2.14 and table 4 set out the performance of each of these funds that Lincolnshire is invested in. Section 3 sets out details of the property venture funds. These are individual investments which are made into 6 individual funds. 4 of these are in their final stages, with their initial investments being made between 2005 and 2007. Paragraphs 3.2 to 3.9 set out details of these funds and their performance, and the committee can see that due to the timing of these investments, their performance has been mixed. The fund has made 2 new commitments to private residential schemes, one with Hearthstone in July 2020 and another with Allianz in March 2021. Details of these schemes are set out at paragraphs 3.10 to 3.13. Section 4 provides further information on the European Property Fund, and Section 5 on the fund's infrastructure investments. In terms of infrastructure, the fund has made 5 commitments to infrastructure schemes. 3 of these are to PFI and similar projects, and there are 2 newer commitments which have been made after January 2017, when the committee agreed to increase the strategic allocation of infrastructure to 2.5%. The final section of the report sets out the future for property and infrastructure investments by the fund and the work which is currently being undertaken by Border to Coast to develop their property offerings. The goal is that Border to Coast will offer a global property sub-fund, which is due to launch in 2022, and a UK property sub-fund, which will include direct holdings in real estate, which is due to launch the following year. Both of these funds, the fund plans to invest in. Training on the fund's strategic asset allocation, as Joe has already mentioned, will be covered in the September training, and the fund will consider what allocation or further commitment they may want to make to global sub-funds. Future infrastructure investments will be made via Border to Coast as well, but this will only be considered once their full range of diversified alternatives are up and running. Thank you, and I'm very happy to take any questions on the report.
Thank you, Claire. Questions from committee? Yes, Mark.
Property is always an interesting investment, and it's quite volatile to a certain extent as well. So I'll leave it at that to a great extent. The question that I really got is that I believe that the Chancellor is fairly intent on trying to encourage pension funds to make infrastructure investments. And I hope that's when he means infrastructure rather than property. Has there actually been any genuine contact between pension funds and the Chancellor on this, or is it just a headline that's been grabbed?
Yeah, if I can take this one, please. Yes, there has been a lot of discussion. I think it went back to initially with George Osborne wanting to use what he described as the sovereign wealth funds rather than the local government pension funds to invest in UK infrastructure. I think he was very clearly told that the local government pension fund money is to be invested for the benefits of its members. If that assists the UK economy, that's wonderful, but that's not its purpose. However, infrastructure is a good long-term investment for pension funds, and we do invest there now and we will continue to invest there. There is still some guidance expected to come out from MHCLG updating the 2015 guidance, where it did talk about additional investment in infrastructure. However, the government does now understand that it cannot direct us to invest anywhere. As I say, for long-term investors as we are, infrastructure is a really good opportunity, but it's making sure it's the right sort of opportunity, whether that be UK or overseas. So yes, there is pressure. However, that's balanced by the Scheme Advisory Board, the Local Government Association, and the pools and the pension funds all just going back saying, yeah, we hear what you're saying, and if there's a good investment opportunity, we will consider it.
Mark, do you want to come back?
Yeah, yes, Chairman. Could I just follow up the comment that Joe's made that at an appropriate time there may well be a need to bring something to the committee about what it is that's, you know, perhaps crystallising, and would you please do that? Chairman, with your permission.
Yeah, Joe.
Sorry. Yes, well, I think in the discussions about the strategic asset allocation in September at the training, I think that will be very useful, and then we will the discussion points and any recommendations from that will be brought forward to the October committee.
Okay, you okay? Thank you, Joe. Thank you, Mark. Any other questions? Yes, Andy.
Thank you, Chairman. Thank you, Chairman. With regards to the market value that's applied to property, and especially with the allocation we have to offices in the South East and London, is there any assurance of the validity of those numbers? Is it audited, or is it an expectation that we're told by the people that own them? Thank you.
Looking particularly at the UK commercial property unit trusts that we hold, the valuations are provided by RICS, so the professional body in the property sector. So they are all independently provided to those fund managers. If you remember back to the 31st of March last year, 2020, RICS had placed an material uncertainty clause on their valuations because of the uncertainty that COVID was putting onto those. As a direct result of that, the valuations were more uncertain than they had been previously. The 4 funds that we are invested in had taken the action at that point to close trading on those funds because of that uncertainty, the prices that were quoted, it wouldn't be reasonable for people to be able to cash units at that point. For the majority of funds, that stayed in place for a further 6 months through till September, October 2020, when RICS felt it was appropriate to remove those. They were removed. The certainty around the valuations had increased at that point, and trading in those funds subsequently carried on from that point in time. I think with the professional status that RICS have and their requirement to meet their standards, I don't think we have any concerns over those valuations particularly, albeit I understand what you're saying in terms of is there an inherent shift in the property requirements which is placing some valuation concerns around those, but RICS will be building that in I guess, in their assumptions around obsolescence and things like that, where there maybe isn't such a demand, and that will be brought through because those valuations will be on a part of that market valuation will be on a rental potential for those properties.
Thank you.
Thank you. Thank you, Claire. Any other questions? Yes, Peter.
Yeah, Mr. Chair, again, just a small one. I know probably for new members, I didn't know, Joe, whether you just sort of go through the quick scenario of the Invesco issue we had over the last year or two and how it's culminated. So is that pretty well cleared by Claire, or, you know, it's just to show that we don't just sit here as dummies, that sometimes we do have to act against some of these big bodies that invest our money.
Yeah, you have to take your mic off.
Sorry.
So
Yep.
she can.
The specific issue around Invesco I comment on in the next paper on the agenda. So, yeah, no, it's not ignored.
Okay. Thank you both. Right, no other questions forthcoming. Committee are asked to note the report. Please show in favour. Thank you, that's carried. That concludes item 13. We need to consider exempt information, and in accordance with section 100A4 of the Local Government Act 1972, agenda item 14 has not been circulated to the press and public on the grounds that it is considered to contain exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Local Government Act 1972 as amended. The press and public may be excluded from the meeting for the consideration of this item of business.